Okay, part B. So it's the same question, Ribby Company. We are now going to do part B. Part B of the question, which says that explain how goodwill in respect of a foreign subsidiary should be calculated and treated in the consolidated financial statement. There is no requirement to refer to any exhibit when answering part B. So it means that this part B is actually 100% pure academic question. So he says that no requirement to refer to any exhibit. What do we have to tell? They're asking us to find what is the treatment of goodwill in respect of a foreign subsidiary. Okay, and that is for 4 marks. Now, it will depend. Basically, it's not asking about goodwill. What is goodwill? You can begin with what is goodwill or how it is calculated. That will not be damaging. But primary focus is only that goodwill in respect of a foreign subsidiary. So you can begin with that goodwill is calculated as the difference between the consideration plus the non-control consideration paid including non-controlling interest minus the net assets of the subsidiary at the acquisition date. So this is somehow the amount which is paid over and above or in excess of the net assets of an entity at the time of acquisition. That is called goodwill, and it is shown as under non-current assets on the statement of financial position in the group consolidated financial statement, because group goodwill does not appear in individual. So you mentioned that it is shown on the consolidated statement of financial position under non-current assets. That's here. In case of a foreign subsidiary in which the parent has the goodwill, the initial measurement is done in the local currency. Now that's where the examiner wants to listen. Okay, so here the answer starts, where examiner is really looking at, do you know what is this or not? So in the group financials, so initially the goodwill is recorded in the local currency, and in the local currency, and however and subsequently at the reporting date, it should be translated into the foreign currency. It should be translated into the foreign currency, which is the currency of the parent, in the which is the currency of the consolidated financial statement, or which is the currency of the parent, and any exchange differences which arise due to the movement in the exchange rates, those exchange differences should be shown in other comprehensive income by debiting, if there is an exchange loss. So you would say debit the exchange reserve and credit goodwill non-current asset and so on. So exchange differences, and it will be measured at the spot rate. I should have mentioned that at the subsequent date, goodwill should be measured at the spot rate, which is like the closing rate. At the closing rate on the reporting date, and translated into the foreign currency and then shown into the statement of financial position. And any differences which arise as a result of translation should be recorded in the statement of financial position. Okay. Now, this is the basic concept. We understand now that goodwill will be remeasured, translated. And because exchange rates, they move, so there is quite a big possibility that there will be exchange gains or losses. And then the question is where you should report them in OCI. Okay. Now, another thing which you should understand here, because again, that is for a 4-mark question, and I would definitely suggest you, because whenever goodwill comes, a very common question is that what happens to goodwill to the parent and NCI? Remember the division or distribution of goodwill to parent and NCI. So in your second paragraph or in your third paragraph, you should also highlight or mention that issue as well, that in case the NCI, the non-controlling interest, is measured at proportionate method of proportionate as a proportion of net assets, then the goodwill, then the NCI is not allocated any goodwill, and the entire goodwill, it belongs to the parent, and therefore any gains and losses on the on the translation of goodwill should be charged to the parent only, because NCI has got nothing to do with the goodwill. In case the NCI is measured at fair value, then we have to allocate a part of the goodwill to the non-controlling interest as well, in proportion to their ownership. For example, if non-controlling interest is 40%, then 40% of the goodwill is charged to NCI, and 60% of the goodwill is taken to the parent. So if the NCI is measured at fair value, in that case, NCI has its portion of ownership in goodwill, and therefore any gains and losses on translation of goodwill should also be distributed between the parent and the non-controlling interest in proportion of the ownership. So this was actually very important to mention, that when you will have these exchange differences, so it is an exchange gain or it is an exchange loss, who takes this exchange gain? Who takes this exchange loss? Very simple. If NCI is at proportion method, so NCI has got nothing to do with the goodwill itself, and therefore impairment of goodwill also they don't take. Under IS 36, we also learn the same thing. I mean, when we do it. So what happens that when you have a proportionate method of non-controlling interest, so NCI says I've got nothing to do with goodwill. So any impairment of goodwill I'm not taking. Any gains or losses as a result of translation in goodwill I'm not taking. But if it is in the case that NCI is measured at fair value, then NCI has the ownership of goodwill, and therefore any impairment should be charged there. Now, I'm not discussing impairment here because the standard did not ask you that what happens with the impairment of goodwill. That goes into another situation. But I'm just giving you reference for your, to make it clear, just like you did it another standard. The same principle will apply here. Here we are talking about exchange differences. So exchange differences should be given to NCI or not. The same principle will apply. If it is fair value measurement of NCI, they will take exchange differences to NCI as well. If it is proportion method of NCI measurement, then everything will be taken by the parent. So this was a short question, but it is an important concept.